Hello, I'm Gary DellaPosta, a CPA. Today I'm talking to you about starting your business, and one of the most important decisions you'll make is what type of business entity you will use to run your business. It's a decision that impacts many things, from the amount of taxes you pay to how much paperwork you have to deal with, and what type of personal liability you will face. The most common forms of business are sole proprietorships, partnerships, limited liability companies, also known as LLCs, and corporations, either a C Corp or an S Corp. Now, there are two major decisions in choosing a business entity. The first is taxation. And businesses can fall under two types of taxation. There is the pass-through, or also known as flow-through taxation. In this case, the entity is not taxed, but its owners are taxed on their proportionate shares of the entity's income. Pass-through entities include sole proprietorships, partnerships, LLCs, or S Corps. The second type of taxation is known as entity taxation. And here the entity pays tax on the income it earns. C corporations fall under this type of taxation. Your second major consideration in what type of business entity to use is limiting your personal liability and assets from the claims of business creditors. Generally, corporations and LLCs accomplish this. So now I'm going to take you through the types of entities, some of the advantages and disadvantages. First is the most common and easiest form, which is a sole proprietorship. It's defined as any unincorporated business owned by one individual, and a sole proprietor can operate any kind of business. In general, the owner is personally liable for all financial obligations and debts of the business. As a sole proprietorship, your net business income is combined with all your other income and deductions and taxed on your personal return. And because sole proprietors do not have taxes withheld from their business income, you may need to make quarterly estimated tax payments. Also, a sole proprietor must pay self-employment or Social Security tax on their net income. The second entity is a partnership, and that is where two or more people join together to carry on a business. Each person expects to share in the profits and loss of the business. Partners are not employees of the partnership, and the partnership does not pay any income tax. Partners report the income and expenses from the business and the net profit on their individual return, and they must report and pay tax on that income even if they don't receive a distribution from the partnership. Because taxes are not withheld, the partners generally need to make quarterly estimated tax payments, and like a sole proprietorship, they must pay the self-employment or Social Security tax on the partnership income. The third entity, also a pass-through entity, is an S Corp. It has the same corporate structure as a standard corporation. However, the shareholders elect to pass the income, losses, deductions, and credits through to their personal returns. Shareholders of an S Corp generally have limited their liability and their access to personal assets. Generally, an S Corp is treated the same way as a partnership, and taxes are not paid at the corporate level. The shareholders pay the tax on their corporate income regardless of whether it is distributed. And S Corps therefore avoid double taxation on the corporate income. A limited liability company is a business structure allowed by state law. Each state is different, so it's important to check the regulations in the state you plan to do business. Owners of an LLC are called the members. An LLC with at least 2 members is classified by the IRS as a partnership for income tax purposes. An LLC with only one member is treated as a disregarded entity and is taxed as a sole proprietorship. Finally, we have C Corps. When you form a C corporation, you create a separate tax-paying entity. The profit of the corporation is taxed to the corporation when it is earned, and then is taxed to the shareholders when they distribute dividends to themselves. This creates a double tax. If you organize your business as a corp, generally you are not personally liable for the debts of the corp. So when you're making a decision about which type of business entity to choose, each business owner must decide which one best meets his or her needs. One form of business entity is not necessarily better than any other, and obtaining the advice of a tax professional is critical. If you need assistance figuring out which business entity is best for you, don't hesitate to call my office. Thank you.